And we're back, everybody, for stream number 2. We had a little issue showing up in search, and so we restarted. Thanks for rejoining us, everybody. The spice is not over today. Please smash that like button, share the stream again. We did hit 420 likes earlier. Maybe we can do it again. Double 420, double the fun. Bitcoin doing some things. I guess we'll go over what we went over. I don't know. Take some requests. Let's see. I will be on Across the Blockchain today on BitBoy's channel at 5 p.m. East. That's 3 hours before the market closed, so what, 21 UTC. Hopefully you come join me, vote for me. Let's manipulate that vote. Let's win again. It's going to be a good show, actually. I know the guests, good guests today, so it'll be a good time. I love being on that show. Think what you will of BitBoy. It doesn't really matter. I'll be there, so you know it'll be quality. Yeah. We weren't showing up in search, and hopefully now we are. I'm not really going to pay attention to it, though. I'm going to try not let it bother me in case we aren't. Womp. Let's get into some TA here. We're going to take a look at our charts through a calm, logical perspective, using analysis, using our tools that have done us so well in the past. Well, let's see. I don't even know. I don't even know if it's going to work. Are we even live? We're probably live. All right. So we've been watching Bitcoin setting a new high here. If we zoom out to the macro, we got some spices going on. We got some spices. We've broken through our daily resistance. Daily resistance right here from back in September, early September before our fall, around 52.7 today, blasting through. If we take a look at the weekly, we got the best signal possible. We've been waiting and waiting for this. And it's finally come. Here we are. I don't know if anybody else was looking at this. This might be just us, as usual, right? Literally, that's the story of our channel. We're looking at stuff. It ends up happening. Everybody else catches on. I'm okay with it. We have our cross above the clouds. Ichimoku generating the most bullish signal it is capable of generating. This happened today on this weekly candle. If we zoom back in history, as a quick recap, we do see these yellow arrows are produced often. However, it's the combination of the arrows and price action that's important. Here we have a upward cross. We had a downward cross back in June, but we have an upward cross above our Ichimoku cloud. That is a very specific setup. Oof, keep burping. Very specific setup. If we zoom back in history, we will see the last time that this happened. It's going to get spooky here. Back here in October 2016, 5 years ago, price was at $642 during that cross. After the cross, we saw no lower lows. It was only up after. Only up. We went from $632 all the way to $20,000. We had our parabolic move. Ichimoku cloud now suggesting that we may be at the foot, at the first step of that parabolic move. Wild. If we had an equal price move from here that we saw back in 2016, that would put Bitcoin at like $1 million. I'm not quite aiming that high for this cycle. That would be great. I'd welcome it. But that might be a little bit too much to ask, right? That's a big ask one. Over $1 million this year, yeah. However, it does absolutely bode well for the $100,000 argument for 2021. We've been looking for it all year. Nothing's changed. We've been waiting for the signals finally confirmed. However, actually, I think it is confirmed now. Even if the candle closes lower, I think we still have that cross because we've reached a higher high. I don't think that selling off will invalidate that, which is pretty spicy. If we get rid of our Ichi cloud, we look at our moving averages, and they're telling a pretty interesting story as well. And again, guys, this is on the weekly time frame. This is not some messing around, tiny, zoomed in time frame. This is macro. We see our 20 white moving average here. In the previous 2 weeks, we've tested it as support, found buyers, bullish engulfed, and now we're seeing continuation. The exciting part is that 20 and the 50, they're positioning, and this is unique to our channel. This is our own unique analysis. If you find it anywhere else, they must have learned from us because we invented it. We have what we call a bullish kissing. we get rid of our candles here, make it a little more simple, and just look at these moving averages, what we see is the kissing is defined when a smaller moving average, in this case the 20, the white, is moving towards a longer moving average, in this case the 50, the yellow here. It's threatening a cross, a death cross. But before it happens, so we saw on the 20th of December, before it happens, price interacts, moves above the 20. We saw that happen here in the last few weeks. And rejects that bearish crossing. We call this a kissing. Why? I don't know. It's just the word I made up. But kind of because they come together, they kiss, and they move away. This is an extremely bullish signal. To have that overlapping with our Ichimoku cloud cross on the weekly, this chart is primed. This weekly chart is looking monstrous. Our VWAP on our market cipher indicator here moving up in the way that we want to see during this time. We had a pretty savage fake out here. Our momentum had moved up and rolled over and kind of was threatening maybe more downside or continuation, or at least a test of 30K. But we can see that momentum moving back up on this candle. This chart has gone, and we were speculating this for months. This chart has gone from what looked like dog crap back in July, literally to almost every time frame simultaneously flipping to a bullish state. The 3-day, I think, maybe is the most exaggerated example. If you look at the 3-day, this really was looking weak. These sell-offs, bearish engulfs, no real bull power, no bullish engulfing back, no real buying response. We saw a very ugly consolidation down there in the 40s before lifting off here. Ichimoku cloud again giving us a little insight to this. We had fallen into our cloud. We found support at the bottom of our cloud perfectly. That low touches that bottom of the cloud perfectly on the 3-day. 39,600. Rallied back above, and in this 3-day candle, which closes today, looking to close above resistance on the 3-day, 52.6. We have intra-week back-tested, or intra-3-day, back-tested that cloud of support and moved higher. We see the cloud over here beginning to twist, showing us the winds may be changing. It is just phenomenal. When we started speculating this, it was almost it wasn't a joke, but it was almost a joke, because things looked so bad that it was really kind of some hopium. Now we're actually seeing it play out. We're actually here. All of these time frames rolling over simultaneously, all at once. A cascade. I would argue it started on the 3rd of October. We were trending inside the cloud, ranging inside of our Ichimoku cloud. On the 3rd of October, price was above the cloud, so exactly the setup we were looking for now on the weekly and just got. Price was ever so slightly, you can see that here if we zoom in, ever so slightly above the cloud. We got our cross signal, and boom, 1, 2, now 3 days of increasing candle sizes. The 4th with a 2% gain, the 5th with a 4% gain, and now today, though this candle's not closed and we have 7 hours, way too much time to call it, we're sitting at about 6%. I call this bubbling, another kind of made up term I made. Basically, it's where you see a series of candles, whether they're red or green, doesn't matter, where their candle sizes, their bodies are getting larger or smaller. And usually this shows us momentum. Once these candle bodies start getting smaller, so let's say today sells off and is closes with less than 4.5% gain, then we may see the opposite of bubbling. We may see that momentum waning off. All about the candle body sizes. As long as they're increasing, this is moving parabolically, basically. This is what we want to see. I think it started on the 3rd with this cross up above the cloud, and in the same week, we got it on the weekly. A signal we haven't had in 6 years. Things are looking extremely good. Even the monthly, when we zoom out, we can see the monthly held its Kaijun as support. We see that this recent price action has moved us into a bullish engulfing monthly above local resistance from last month and above the TK. The only real value left above us, there's only one. I made a new chart because there's too much on that one. There's only one real value of significance, in my opinion, above us. I'm going to show you that right now. We've talked about it. Probably sick of hearing about it. I was of the opinion that we were going to reach this last month. You guys might remember that. I had very high expectations that October would have tested 58.8. It didn't. It's not the end of the world, especially seeing how September now is picking up the slack. This is it. That's it. 58.8. I argue if we can even test 58.8, that means a new all-time high is coming. Doesn't give us a timing on it, but it does bode extremely well just by testing that level. This is the last resistance, in my opinion. Anyone else is welcome to agree. There's definitely some logic to say, well, what about the all-time high? Sure. I mean, there's going to be some sellers there. However, we've never seen Bitcoin really get stopped by a double top. In bear markets, we've seen some double top price points that have led to sell-offs, but we've never seen in a bull market a double top and a rally. So by getting to 58.8, I'd argue that's basically the all-time high. That's basically a double top. And that's the last hurdle in our way. If we use our extension or our retracement tool, we see that we have extended past. We've rallied past the golden pocket. That was resistance for our monthly in the last month. And now we are all the way to our 786 retracement. 786 retracement might not mean anything to you. That's okay, because I'm going to help you. A 786 retracement is a deep retracement. It's an uncommon retracement. Typically, we look to the 0.5, to the 0.618, that little green rectangle I drew. This is an uncommon retracement. It is generally accepted in technical analysis that when a market retraces to its deep retracement, that's 786, that while it doesn't say it's going to go straight up, it suggests that the market is looking for continuation in the trend. We've touched that level, 54,500. In fact, we traded above that level today. 55.3, something like that. We traded above it. Deep retracement completed. And so this is, again, another piece of evidence, another variable to add to our equation for our trades that favors the bullish case. Breaking 58.8 to me is going to be the nail in the coffin. In fact, I would argue the nail's already in the coffin for the bears. I think the bears are done. Do I think this is going to only be green all the way up? No, I don't. It's not really realistic. Bitcoin doesn't really move in just one direction for very long. It's always moving in both directions. But I believe the probability of retesting the all-time high this year and breaking it is very good. Very, very good. I don't know the path it'll take to get there. It could go. It could just be in one day. It's possible. I don't think that that's a good bet. It's possible. I think the most logical thing we would do here is we would look and say, all right, well, the monthly is pretty clear. So let's look at the weekly. Weekly level, really close to that 58.8. It's not even worth really changing it or adding it or whatever. 58.8 is good. But what we have is from August and September's open, 51.789. So what we might see happen, I think this is a probable play, is we have 4 days left in this week, so this is possible. Might take another week, who knows, to reach that 58.8. And then I know this is going to be painful. A back test of 51.8. This may be the entry for people who sold and didn't get back in. That may be the entry. Back test that weekly resistance as support. And then go move up to that all-time high. Doesn't have to happen in 3 weeks. This is just a general kind of concept. General concept of how this price action is likely to play out. This is not financial advice. I'm not your financial advisor. But this is my, I don't know if I'm going to say expert opinion, I guess. Maybe I'm an expert. It's up to you guys to decide that. This is my opinion of what is going to happen. You guys know who have been here. We were never phased. We were never phased. This was not a bull market top. This was not a blow off top. This was not the shape. This is not the structure that we have ever seen in Bitcoin's history to end a bull run. When we reached down to 30K on this channel, we were at one point probably the only people bullish still. In May, there's recordings of me saying Yeah, we've dropped. We might see slightly lower lows, but we are almost certainly going to return to 48,000 at least. And at 48,000, that's where we can really start to say, are we going to fall lower? Are we going to see a bear market? That's what happened. We moved back to 40K. We didn't see that harsh rejection that I was worried or afraid of. We didn't see it. The 20 weekly moving average was the player here. So instead of rejecting from it like we've seen, every Bitcoin bull market has started the same way. Does that mean that will always happen? No. But we'll keep looking for it until we have something new to work with. Doesn't make sense not to. But every Bitcoin bull run has started this way. It has moved down to the 20 weekly moving average, traded below it. We had that happen. Then price has rallied back to the 20. That's a huge reason for that 48K level. It was at 48K at the time, the 20 weekly. It rallied back to the 20. And in every bear market, we have seen a rejection from the 20 and a lower low. That didn't happen. Instead, we rallied past the 20. And instead of rejecting from, we actually found support there. Now we're moving back up. I think it's close to champagne popping time. You know, I don't like to get you guys excited about stuff. I don't think that it's helpful. I think it just gets emotions moving, and that typically leads to bad trades and bad decisions. But I think we're past the hard part, man. I think we're past the hard part. If you survived this space, so let's take it from like April. Yeah. April till today, till yesterday, 163 days of pain. And what painful days they were. They were not just painful, they were boring. They were low volatility. They were virtually the perfect combination to get people to stop paying attention. And we've talked about that many times here. Bitcoin is shy. Bitcoin does not like to be watched. Does not like to be watched. When you're watching, it likes to freeze. It gets nervous. There we go. Now we're back in search, baby. Yeah. Gets nervous. I think that this was enough. I think that this 190-day, 180-day period of pain has taken all of the investors up here, everyone who bought in up here in the high 50s, 60s, I think they capitulated. I think that fear and boredom got them to sell or go short. It's exactly the setup Bitcoin always is looking for. It wants you to look away. It wants everyone who is going to, meaning all the weak hands, to lose, to drop. I think we have that. We had a pretty spicy setup here. This was a great signal for us. We had a broadening bottom, characterized by touches to a high ascending trend and touches to a low descending trend, with a higher low and then a break of that trend. That's what we got. I did at least. I thought we were going to hold 42.2 here, and we were going to have a perfect back test of this trend line, and that we're just going to run from there. Bitcoin's never that easy. Traded below it and painted one of the ugliest daily patterns that we've seen in a long time. This pattern right here on the daily, we would expect that to break down. We have our highs coming down and we have a flat bottom. The probability of that breaking to the downside is always good, especially with the way this one played. After falling back beneath that trend line, etc. But it was a fake out. We traded back above it. If we look on the weekly, that exact trend line looks a little more logical here. Check that out. The weekly closed virtually on top of it. Virtually on top of it. Opened up virtually on top of it. Bullish engulfed off. This pattern on the weekly, I think, is totally valid still. 1 touch, 2 touch, 3 touch. Touch, 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 touch. Boom. Bump and run. This was huge. This was a huge pattern. We might have something similar, a fractal perhaps, a pattern that's repeating. We might have a fractal here. And we can look at it this way. Now we're zoomed into the daily. We were on the weekly. Now we're on the daily. We may have a pattern repeat here. We see that kind of similar ascending high and descending low trend. We have touch, touch, touch. We don't have the lower high, so this is actually a little different. But what we might still see, and this could, actually this lines up perfectly with what we were just talking about on the weekly with the back test of that weekly level, is we may see a back test of that weekly support and this ascending trend here. And what that would be is the exact same pattern as back here, minus that higher low. Same thing. Bump and run. Bump and run. The all-time high is Insights again. It's Insights. I'm not sure if it's going to happen this month. I would not doubt it. But there's really no way to know the timing. So let's zoom in. Let's zoom in here. On the 5. Candle closes on the 5-minute after reaching our daily high, sitting right there. 54,589. And it seems that the 5-minute has broken through it. And now potentially testing it as support. And excitingly, here's what we're looking for. This line is really kind of more objective or abstract. It's not literal. Flat top. This is one of the patterns we love. We love this pattern because it's a free money machine a lot of the time. We have our lows ascending and we have our highs with multiple touches to a resistance. Each touch to resistance is weakening it, making it, eroding it, taking pieces away. We could see another higher low. In theory, you could see as many of these as, it doesn't even matter. You just keep doing it. But eventually, as you keep testing and weakening that resistance, your probability of a break to the upside expands with each test. Where would we look? Well, we'll use our Fibonacci tool. We'll use our extension here. And our extension tool gives us, boom, just about 57. 57. And this extension tool, again, we're looking at the 5-minute. This is a really, really zoomed in view. This would be a very short-term target. If we zoom it out, we can actually get something a little more interesting. If we take our high right before our fall in September, connected to our low in mid-September, we use that same tool, and then we get some interesting numbers. Our 1618, 63,200. 63,200. We can either draw that up, I guess, to the all-time high, but I think, nah, that's too big of a box. That's not helpful. Either way, we have broken September's high, and so our tool dictates that this is where we look. So consistently does the tool work this way. Fibonacci extension and retracement. So predictably that it's always worth, in my opinion, always worth looking at. Nothing is 100%. Trading it, there is no certainties. And that's why we look for what is the most probabilistic. And look at that little consolidation under it. I'm digging it. I'm loving it. So we're sitting here basically waiting for our next test of that level. 55K, we'll call it. These flat tops are not literal. It's never a single price point. It's more of a concept. It's more of a concept. It's a little vaguer. But you can see that here. If we move back up to this level, that flat top becomes very apparent. Even if it's a little lower, a little higher, doesn't really matter. Hey, Bo. But here we are. Let's take a look at our 5-minute indicators. VWAP is still up. Money flow is still up. Momentum rolling back over. 5-minute looking bullish off of these 5 green candles. We have no divergence. We have no divergence on MACD, which is odd. Not that odd. We have our lows coming up and our price on our lows coming up. No divergence. But we do see that momentum on the sell side here on the 5 minutes waning. 1, 2, 3 candles have closed with waning, selling momentum. And now we're looking for a fourth with 13 seconds to go. That's looking pretty likely. You can see that waning momentum is possibly playing out right in front of our eyes here as this candle rallies into the close. We do have bearish divergence on our highs, which is interesting. We have bearish divergence on our highs in the 5-minute, which doesn't bode well, but we have bullish divergence on our lows, and so we kind of just ignore that. I would say we just ignore that. We don't really count either. The trend is up, so maybe we would side with the bullish, but I don't think that that's a very good signal. So we're going to zoom it out to the 15. See what the 15 has. 15 looking beautiful. Oh, I don't think this rally's done today. I don't think it's done today. The 15-minute looks like it's definitely trying to test that flat top. Money flow is beautiful. Already looking to set a higher high, it looks like. MACD, here's our first kind of conflicting signal. MACD showing a selling momentum, and that selling momentum has not shown us signs of chilling yet. Here's what's interesting, and I remember saying this yesterday, is we have selling momentum, yet price is moving up. That, I don't know if there's a word for that. I don't know if there's a term for that. But we saw it yesterday. Seeing it again today. Might see a repeat. RSI is in the exact same condition as the 5. Bearish divergence on your highs, bullish divergence on your lows. We'll just ignore it and move on. 30-minute. Okay, here's where it gets spicy. We had that nice solid rally, and we had a selling response, taking profit. Sure. Good. Normal. Bears unable to pull price lower. So buying momentum, buying pressure here greater than selling pressure. That pressure chilled out. Price floated back up. We had another large-bodied green. Same scenario, though this one actually traded lower intra-candle. It traded into a bearish engulf, but then closed higher. Buyers came back in. Now the story on the 30-minute is, well, this candle sold off. The 30-minute bulls, there wasn't enough buying power into the end of that 30-minute candle. Not enough buying power. We did not bullish engulf back. That suggests that maybe we're going to range sideways. That lines up pretty well with what we were talking about with our higher lows, retesting that high. Trading sideways is very similar. That's what the story of the candles here on 30 is telling me.